Good morning, guys. We were discussing about transfer pricing, guys. The only thing that you are supposed to know for this chapter beta is about the concept of minimum transfer price and the concept of maximum transfer price. I told you guys minimum transfer price is from the viewpoint of the selling division, that is the transferring division, and it should be equal to your relevant cost of manufacturing. Relevant cost of manufacturing beta is nothing but whatever is your additional outlay per unit and whatever is the amount of opportunity cost per unit. Additional outlay per unit plus opportunity cost per unit. That will become, guys, the amount of relevant cost of manufacturing. As far as maximum transfer price is concerned, guys, it is from the viewpoint of the purchasing division, from the viewpoint of the receiving division, and that beta will be lower of the net marginal revenue and the external supplier price. Most of the questions beta, they might give only external supplier price, but in case they give us the additional expenditure that the receiving division is going to incur and the revenue that is going to realize better, it would be their selling price minus net incremental cost. That will become the net marginal revenue. Obviously, they will not pay us more than net marginal revenue, because if they do pay us more than net marginal revenue, they are incurring a loss. They are incurring a loss. That will never happen. So it is either lower of net marginal revenue and supplier price. Understood, sir? Now, guys, in the previous class, we did question number 11. We left a couple of questions in between, guys. We are not done with question number 8, question number 9, and question number 10. Question number 10. We're not done with all the other subsequent questions as well. Let us now do, guys, question number 10. Question number 10, beta. Usha Products Company operates a pulp division that manufactures wood pulp for use in the production of various paper goods. The following information is available. Selling price is 210. Variable expenditure beta is 126. Contribution is 84. Fixed cost beta is 54, but that is based on a capacity of 1 lakh kgs per year. Net income is 30. Usha Products has just acquired a small company that manufactures paper cartons. This company will be treated as a division of Usha with full profit responsibility. Clearly mentioned beta that the other company that you have acquired as such, guys, is also, see guys, divisions can be your own departments or they can be group companies. Okay, so this group company beta will now be considered as division, and that is a profit center. Full profit responsibility has been given. The newly formed carton division is currently purchasing 10,000 kgs or of pulp per year from a supplier at a cost of rupees 210 per kg, less a 10% quantity discount. So guys, you know what is the price, but advisor procuring it from the outsiders. Usha's president is anxious that the carton division begins purchasing its pulp from the pulp division if an acceptable transfer price can be worked out. Required: answer any 2 items from situations 1, 2 and 3 below. In the examination, guys, when the question was given for 10 marks, there were 3 situations given. You were supposed to answer only 2 questions. Abhi beta, we are now doing it in the class. You're supposed to answer all the 3 situations. Situation 1. If the pulp division is in a position to sell all of its pulp to outside customers at a normal price of 210 per kg, if the pulp division is able to sell the entire pulp to the outside customers at a price of 210 per kg, will the managers of the carton and pulp division agree to transfer 10,000 kgs of pulp next year at a determined price? Explain with reasons. Your carton division is already procuring it from outside beta at 210 less 10% discount beta, that is 189. When the first division, guys, that is pulp division, can sell in the external market at 210 and the other division can procure it but at only 189, it doesn't make any sense as such, guys, for us to transfer to the other division. Of course, we will present it properly, but on the face of it, guys, it doesn't make any sense for us to transfer it to the other division. Why will it is like, but a minimum transfer price will now be 210 per kg. That would be whatever is your additional outlay per unit beta plus contribution foregone, opportunity cost. That will be external selling price. Assuming that the pulp division is currently selling only 60,000 kgs per year to outside customers at a price of 210 per kgs. Now we have spare capacity, guys, because our total production capacity is 1 lakh, but external demand beta is only 60,000 kgs. Out of a total external demand, out of a total capacity of 1 lakh kgs, but our external demand is only 60,000 kgs. Yes. Will the managers agree to a mutually acceptable transfer price for 10,000 kgs? Yes, beta, we will work out the transfer price. It will range from minimum transfer price of 126 rupees to maximum transfer price of 189. If the outside supplier of the carton division reduces its price to 177 rupees per kg, will the pulp division meet this price? If the outside supplier beta is reducing the price as such beta to 177 rupees per kg, will the pulp division meet its price? ठीक है beta. Understood, sir. Question is normal, guys. All of you read the question beta. All of you better read the question, guys, quickly. I hope you're all reading it, guys. Yes, beta. I hope you were all reading it as such, guys. ठीक है? एक second, beta. Yes, beta. Let me continue, guys, with the solution here. These are all going to be easy questions as such, guys. Examination में तो बेटा transfer pricing से बहुत easy questions आ रहे हैं. It's like giving you free 10 marks, free 20 marks as such, guys. So here, guys, let us talk about the pulp division, guys. Now let us talk about the pulp division. For the pulp division, guys, I'm writing the given information. Beta, capacity is 1 lakh kgs. Capacity is 1 lakh kgs. The selling price per kg beta is 210. Variable cost per kg SR beta is 126. Contribution per kg is 84 rupees. Contribution per kg beta is 84 rupees. If you talk about full cost beta at 1 lakh kgs, full cost at a capacity of 1 lakh kgs. I'm just writing this beta for the purpose of comments. This would be variable cost beta plus fixed cost, that is 126 plus 54 beta. 126 plus 54, guys, 180. This is your full cost as such beta. This is for pulp division. As far as your carton division is concerned, guys, paper carton division, guys, their external supplier price or external procurement price, guys. Their external supplier price beta right now is 210 minus trade discount of 10% as such beta. So they're able to procure it only 189 rupees per kg. They are able to procure it only 189 rupees per kg. Let us not forget beta, I will just write, guys, details like minimum transfer price beta would be whatever is your additional outlay per unit. Additional outlay beta per unit plus opportunity cost per unit. Opportunity cost per unit. This would be your minimum transfer price, guys. Maximum transfer price would be lower of net marginal revenue and supplier price, that is external buying price. These are all the details, guys, that I would be needing to solve this question and nothing else. These are all the details. Whenever they say beta whether the organization as a whole will benefit or not, this is nothing but goal congruence beta. This is nothing but for the purpose of decision making. For the purpose of decision making. Yes. Please make a note of these details, guys, or you must have already done it with me, guys. You must have already done it with me, but these are just the details. After this beta, we are going to write the first three bits. After this, we are going to write the first three bits. I hope you're all writing these details as such, guys. Yes, बेटा लिख रहे हो ना सब लोग. These are just the given details, guys, so that you know what is to be used as such better to answer the question. Yes, guys. Now, better. After we are all done with this, guys, given details, let us look at the first bit. All the three bits beta would be very, very simple beta now. They've given us 5 marks beta for each bit. Situation 1. If the pulp division is in a position to sell off all of its pulp beta to outside customers, what they're telling us beta is that pulp division beta has no spare capacity. There is no spare or idle capacity. No spare or idle capacity as such, guys. If there is no spare or idle capacity as such, guys, please do not forget beta your minimum transfer price. Minimum transfer price as such, guys, would be equal to whatever is your marginal cost per unit, guys, variable cost per unit, that is additional outlay per unit beta, plus contribution foregone per unit on external sales. Contribution foregone on external sales beta. In case you transfer internally, undoubtedly you are foregoing contribution. Our marginal cost as such beta is 126, contribution foregone is 84, 210. Whereas our maximum transfer price as such, guys, maximum transfer price as such beta would be external supplier price directly. He did not give us details of net marginal revenue beta, and this is 189 beta. External supplier price is 189. Please understand, guys, there should be no internal transfers. There should be no internal transfers. There should be no internal transfers as such, guys. Why beta? The company as a whole beta will lose. The company as a whole will lose. Please understand, guys, the company as a whole beta will lose. How much, guys? Will lose 21 per kg. That is 21 into 10,000 kgs. 10,000 only beta. 2,10,000. 2,10,000 if transferred internally. If transferred internally. How do I have to conclude it, sir? ऐसे सोचो बेटा that your internal cost of manufacturing, guys, or your relevant cost of manufacturing beta is The relevant cost of manufacturing as such beta is 210 rupees, but supplier price as such beta is only 189. Obviously, what is better beta? It is better to procure from outside. It is better to procure from outside, guys, and not transfer internally. So on my yes, sir. This is the answer to the first bit, guys, in which you should not go wrong. Situation 1. Copy, guys, and then we'll proceed to situation 2. If you're doing it on your own, guys, well and good. Proceed up to situation 2 directly. If you are doing this on your own, but you can directly proceed to situation 2, guys. You do not have to wait. Hope you're all done with this, guys. Proceeding to the next bit, guys. नहीं हुआ तो pause कर लेना, but I'm giving you a lot of time. We took a lot of time to read the question. And these are all normal bits, guys. They're the same things being repeated again and again. Situation 2, guys. It says that assuming that the pulp division is operating at only 60,000 kgs, beta, now what will happen? What will happen as such, guys? So external demand, beta, external demand beta for pulp division, external demand as such beta for pulp division is 60,000 kgs. Is 60,000 kgs. Our total capacity is how much, beta? Sir, our total capacity is a lakh kgs. Our total capacity, sir, is 1 lakh kg. So what is the spare capacity that we have? Sir, if out of 1 lakh kgs external demand is for 60,000 kgs, we have a spare capacity of 40,000 kgs. Okay, sir. So what is the requirement of carton division? Requirement of carton division as such, sir. Requirement of carton division is only 10,000 kg. So the entire requirement of carton division beta will be met out of spare capacity. Yes or no? Yes, sir. The entire requirement of carton division will be met out of spare capacity. Will be met out of spare capacity. Understood, sir? That we are going to meet the entire requirement of carton out of spare capacity. Perfect, sir. So guys, your minimum transfer price is such beta. Minimum transfer price, guys, will only be your marginal cost per unit. That is additional outlay per unit beta. There is no opportunity cost. There is no opportunity cost. Please understand, guys. So that is 126. Maximum transfer price as such beta would remain same. Maximum transfer price would be the supplier price beta. Supplier price for carton division. Supplier price beta for carton division, and that is 189. So yes, beta, transfers should take place. Transfers should take place, guys. Internal transfers beta should take place, and the range of transfer price beta, the range of transfer price that they will negotiate as such beta would be 126 to 189. The range of transfer price beta at which negotiations can happen beta is 126 to 189. Please understand beta. Our relevant cost of manufacturing, guys, relevant cost of manufacturing is 126, whereas the supplier price as such, guys, supplier price is only 189. We should manufacture. We should manufacture. In spite of this, guys, if procured from external market, what will happen, guys, to the company as a whole? If procured from external market, the company as a whole beta will lose. The company as a whole beta will lose 189 minus 126, guys, into 10,000 kg, so that is 6,30,000. The company as a whole as such beta would lose 6,30,000. I hope you're all clear about this, guys. 189 minus 126 into 10,000, 6,30,000 beta. Okay, sir. I hope you've all understood this, guys. I'm giving you all the possible explanations, guys, so that you do not go wrong anywhere. Okay? Yes, sir. Please write this, guys, and then we'll answer situation 3. We'll answer situation 3, guys. Yes, guys, please check better, all of you. I know you were all doing it with me. I'll just wait for a minute or two, guys, and then proceed to the next bit. And then proceed better to the next bit. Yes, guys, here better. If you, in case you're not done with the upper part, pause and copy. Here, guys, this one. Finish off this as well, guys. Do finish this, guys. I hope you're all done with this. बेटा नहीं हुआ तो pause करके copy कर लेना, ठीक है? Yes, sir. Third bit, बेटा now. Assuming that the pulp division, guys, is currently selling only 60,000. Sorry, if the outside supplier of the carton division reduces the price to 177, will the pulp division meet this price? If the pulp division does not meet the price of 177 rupees, what will be the effect on profits as a whole? So here, guys, for the third bit beta, you will have to assume, guys, that there is spare capacity. Assume there is spare capacity. assume there is spare capacity, beta. Full cost per kg is not relevant. Is not relevant. That is most important point, guys. The only incremental expenditure. The only incremental expenditure as such, guys. The only incremental expenditure beta is marginal cost. पहले समझो guys मैं क्या बोल रहा हूँ. So our minimum transfer price is such beta. Minimum transfer price should be 126. Maximum transfer price beta would be the external supplier price. Maximum transfer price beta would be the external supplier price, guys, and that is 177, guys. 177 beta is your maximum transfer price as such, guys. समझ में आ रहा है? हाँ sir. So here beta transfers should happen, guys, and the range of transfer price, guys, should be 126 to 177. Transfers should happen, guys. Transfers should take place. What will happen, guys, if pulp division does not meet the requirement, guys? Note, if pulp division does not want, if pulp division beta does not want to transfer as such, guys, at 177 or below, the company as a whole matlab, guys, this pulp division is only losing. Company as a whole beta will lose. Please let us not forget as such beta, pulp division also will lose 10,000 kgs as such, guys, into 177 minus 126, 51, 5,10,000. This we have been writing in everything better, but here they have asked us this, guys. If the pulp division does not meet the price of 177, what will be the effect on profits as a whole? The company's profits as a whole beta are going to reduce by 5,10,000 rupees. I hope you're all clear about this. Just for your understanding beta, I will add this statement. The relevant cost of manufacturing as such beta is 126, whereas your supplier price as such, guys, is 177. Is 177. Understood? Yes, sir. Please make a note of it, guys. All of you make a note of it, guys. सब लोग copy करो बेटा फटाफट. Then we'll move to question number 12. 1, 2. Yes, guys. I hope you're all clear about this. Here, guys. Just in case this is not done, pause and copy this part, guys, now. Chalo, guys, I'm hoping that you're all done with this, guys. Just in case you're not done with it, you know what is to be done. Okay? I'm giving you a lot of time as such, guys, to solve each question, copy each question. That was question number 10. Beta, let us now proceed to question number 12. Remember, these are all ICI questions, guys. Question number 10, question number 11, question number 12. All of these are ICI questions. You'll see, beta, how easy they are. Marianne Limited has two divisions. Marianne Limited has two divisions, guys. Division A and Division B. Division A produces product Z which it sells to external market and also to Division B. Divisions in the Mariana Limited are treated as profit centers, and divisions are given autonomy to set transfer prices and to choose their supplier. Performance of each division is measured on the basis of target profit given for each period. Division A can produce 1 lakh units of product Z at full capacity. Demand for product Z in the external market. They given autonomy as such better to set transfer prices and to choose their supplier. Performance of each division is measured on the basis of target profit given for each period. Division A beta can produce 1 lakh units of product Z at full capacity. Demand for product Z in the external market is 70,000 units only at a price of 2,500 per unit. To produce product Z, Division A incurs 1600 as variable cost and a fixed overhead of 4 crore rupees. Division A has employed 12 crores as working I do not know, is that 12 crores? Yeah. 12 crores as working capital. Working capital is financed by a cash credit facility better provided by its lender at 11.5% per annum. Division A has been given a profit target of 2 crores 50 lakhs better for the year. Division B has found two other suppliers, R Limited and S Limited, guys, who are willing to supply product Z. Division B has requested for a quotation of 40,000 units of product Z from Division A. Calculate the transfer price per unit of product Z that Division A beta should quote in order to meet target profit for the year. Also calculate the two prices Division A would have to quote to Division B if it became Mariana Limited policy to quote transfer prices based on opportunity cost. Yes, beta. All of you guys. You need 40,000 units. Right now, beta, we are selling 70,000 units. Perfect, guys. The question is very simple, guys. I would want you to go through the question, guys. We did these questions already, beta, but go through the questions properly, guys. Go through the questions properly. I hope you've got enough time to read the question, guys. Just in case you need more time as such, but I can always pause. Forget the two bits as such, guys, like how we do in all the other questions, but we will first understand the given information, guys, in relation to this question. Forget the answers as such, but let us just understand, guys, the given information here. Division A and Division B, guys. So, guys, Division A. Capacity as such, beta, is 1 lakh units. Capacity is 1 lakh units. External demand as such, beta, is for 70,000 units. And guys, spare capacity, I'm just writing the given information, guys. Spare capacity is 30,000 units. 30,000 units, right, sir? Right. For external demand as such beta, for external demand, please do not forget variable cost per unit beta is 1600. Your selling price per unit is 2500. Contribution per unit is 900. Contribution per unit beta is 900. This is for your external demand, guys. Understood, sir? Your total fixed cost as such beta is 4 crore rupees. Total fixed cost as such beta is 4 crores. Let us compute existing profit, guys. Based on this information beta, let us compute existing profit. Forget beta target profit. What is the existing profit, guys? That is without internal transfers. Without internal transfers. External sales beta should be 70,000 units. So the amount of contribution that we are going to get beta from this is 70,000 units into 900. Is that 63 crores? 6 crores 30 lakhs. Less beta the amount of fixed cost that we are incurring, guys, at present is 4 crores. Do not forget beta we are still paying an interest of your interest on working capital loan beta, interest on working capital facility. It is 11.5% of 12 crores. 1 crore 38 lakhs. So this is the amount of profit that we would be making as such, guys, at present. $92 lakhs. This is the amount of profit beta that we're making at present, 92 lakhs. Are we all clear about this? Yes, sir, we are all clear about this. Please do not forget beta our target profit as such, guys, is 2 crore 50 lakhs. 2 crores 50 lakhs. Understood, sir? These are the details, guys. We will answer those two bits better now. Easily can be answered, guys. It should not take more than a minute as such better. So more than 2-3 minutes, guys. Of course, it will take only a minute better if you're doing it on your own better from the scratch. But because you're just doing it better in a very detailed manner, it can take 5-7 minutes or it can take 10 minutes as well. Okay? Yes, sir. Please do this, guys. All of you better do this. सब लोग कॉपी करो बेटा ये. I hope you're all done with this, guys. So you gave us 4 minutes to copy all of this. Obviously, we'll be done. Now, guys, aram se beta. Think about the question. First bit, guys. My next page mein chale gaya. He needs 40,000 units beta. Calculate the transfer price per unit of products that the division A beta should quote in order to meet the target profit beta for the next year. Target profit for the next year. Remember, guys, the requirement of the other division, guys, division B beta is 40,000 units, not 30,000 units. First most important thing beta is the requirement of division B beta is 40,000 units, not 30,000 units. This would mean beta that your existing profit is going to reduce. Your existing profit is going to reduce. Requirement, guys, of division B is 40,000 units. 40,000 units. If 40,000 units are transferred to division B, are transferred beta to division B, our external sales as such, guys, external sales will only be 60,000 units. Yes or no? I will now work backward, guys. Best way beta. What is our target? He is telling us beta that you have to meet your target profit, right? So what is our target profit beta? I'll write amount in lakhs. Amount in lakhs beta. Target profit as such, guys, is 250 lakhs. I will add back interest beta on working capital loan. The interest on working capital loan is 138 lakhs. I will add back the amount of fixed costs that we are incurring at present beta, which is 4 crores 400 lakhs. Don't you think beta that this would be your required contribution? Working backward, guys. Working backward as such, guys, this would be the amount of required contribution, 788 lakhs. I will divide this like this beta. What should be the contribution from 60,000 units? People forget the fact beta that the external sales are going to reduce. वो लोग directly existing profit को उठा लेंगे beta. They will directly pick up existing profit, guys, and compare with the amount of target profit. We will have to do it properly beta like this. Contribution from 60,000 units beta, external sales beta would be 60,000 into 2,500 minus 1,600. So that is 60,000, guys, into 900. 540 lakhs. So the balance contribution required from internal transfers. The balance contribution beta required from internal transfers. The balance contribution beta that you need beta from internal transfers would be 788 minus 540. Please understand, guys, it should be 248 lakhs. Therefore, beta, your required contribution per unit. Your required contribution per unit. I hope beta I'm making it very simple, guys. We are working backward, guys. The question says what should be the transfer price beta that you should quote in order to meet your target income. So we took target income as a base. We are adding back all the fixed expenses, guys, interest cost, to know what is the amount of contribution that we are supposed to make. Once we know what is the amount of contribution that we are supposed to make, but I'm dividing that into two parts. What is the contribution that I need from external sales, and what is the contribution that I would be needing from internal transfers? At this point, you should know that your external sales are no longer 70,000. It is only 60,000 units. Your external sales are only 60,000 units, but are no longer 70,000. So your required contribution beta would be 248 from internal transfers. Required contribution per unit beta from internal transfers would be 248 lakhs divided by 40,000 units divided by 40,000 units, 620 rupees. Therefore, beta, your transfer price per unit, guys, here would be whatever is your variable cost per unit and whatever is the amount of contribution per unit. Variable cost beta is 1600. Contribution that we need is 620. So yes, beta, you should be transferring at 2,220 rupees per unit. If you transfer at 2,220 rupees per unit, guys, you would be meeting your internal profit target of 250 lakhs. Of 250 lakhs. Understood, sir? Yes, beta. Please write this, guys. All of you better copy this. सब लोग कॉपी करो बेटा ये. Yes, but I think I've given you a lot of time to do all of this. I hope you've all understood this, guys. This is the answer to bit one. Second bit, though, guys, you guys are experts in. You can read the second bit, guys. It says calculate two prices. Stress on the word two prices, better. Division A would have to quote, so do not quote an average transfer price, better quote separately. The requirement is to quote two prices, so quote two prices separately, better for transfers out of spare capacity and for transfers out of by reducing external sales. Do not quote an average price. Do not quote an average price, guys. Second bit क्या बोलता है बेटा? Transfer pricing based on opportunity cost. सुन लो बेटा एक बार. I will give you time to copy. Transfer pricing better based on opportunity cost. Based on opportunity cost as such, guys. Whenever they say transfer pricing based on opportunity cost as such, better we can always quote the minimum transfer price as such, guys, because we do not know the external supplier price as such, guys. And then, guys, two prices. Requirement is to quote two prices. Requirement बेटा is to quote. ये सब एग्जाम में लिखने की जरूरत नहीं है. Is to quote two prices. One बेटा is for supplies out of spare capacities. For supplies or transfers out of for transfers out of spare capacity better, out of spare capacity. And then, guys, for transfers by reducing external sales. For transfers by reducing external sales. By reducing external sales. So this is what you'll have to basically quote as such, guys. ठीक है? Yes, sir. Shouldn't be a problem. Minimum transfer price, guys. Minimum transfer price. For 30,000 units transferred using spare capacity. For 30,000 units that are transferred out of spare capacity. For transferred out of spare capacity. Your minimum transfer price as such beta should be equal to minimum transfer price should be equal to variable cost per unit, guys, that is 1600. For 10,000 units, remember beta these are minimum transfer prices as such, guys. For the purpose of decision making as such beta, let it be towards the minimum end only. For 10,000 units that are transferred by reducing external sales. By reducing external sales. Minimum transfer price as such beta would be equal to variable cost per unit plus contribution per unit. 1600, guys, plus 900, 2500. 2500. Are we clear out of this? Are we clear, guys? Yes, sir. ठीक है बेटा. Copy कर लो, guys. कुछ नहीं है, guys. Such a simple bit. Very, very simple, guys. You do not have to quote an average transfer price, guys. You do not have to quote an average transfer price. I hope you're all doing it better. Yes, guys, I'm assuming that you're all done with this, guys. I'm assuming that you're all done with this better. Next question, guys. Question number 13. That came in the examination, but again for 10 marks. These are all simple questions beta, that have been appearing in the examination. Just a question number 10 beta came in November 2018 attempt for 10 marks. Now question number 13, guys. This came in November 2019 attempt beta for 10 marks. Let us go through the question, guys. APC Limited has two divisions, Division X and Division Y, with full profit responsibility. These are working as profit centers. That is how you will evaluate the performance based on profits. That is why they are so worried about transfer price affecting their profitability. Division X produces components GX, which is supplied to both Division Y beta and external customers. So Division X is the manufacturer of component G. Division Y produces a product called as Jextin, which incorporates JEX. For 1 unit of Jextin, 2 units of component GX are required. Sir, input output ratio here is 2:1. You need 2 units of GX beta to manufacture 1 unit of Jextin. Remember guys, we did not see this point in any of the previous questions. ध्यान रखना यहाँ पे. Normally beta we end up assuming if your external demand is 10,000 units, we will have to supply 10,000 units to you. No guys, not in this question. It is 2:1. Till date, Division Y has always bought component GX from Division X at a price of 50 rupees per unit. Since the lowest price at which the component GX could have been brought by Division Y beta was 52 rupees. So guys, Division Y could have procured it from the external market at 52 rupees beta, but then they were procuring at 50 rupees beta from Division X. They were procuring at 50 rupees beta from Division X. Division X charges the same price beta for component GX to both Division Y and external customers. Charges the same price for component GX to both Division Y and external customers. However, it does not incur selling and distribution costs when transferring internally. Not fair, guys. Remember, guys, whenever you're using market-based transfer pricing method, I told you, but an appropriate transfer price, guys, will be the prevailing market price. Then beta adjustment for savings on account of internal transfers. There can be certain savings, like here beta we are not incurring selling and distribution cost. Division Y has received a proposal beta who has offered to supply component GX for rupees 47 per unit at least for the next 3 years. Someone is giving a commitment of supplying this product beta to the other division at 47 rupees only. Manager of Division Y requires the manager of Division X to supply component GX at or below rupees 47 rupees per unit. Manager of Division X is not ready to reduce the transfer price since the divisional performance evaluation is done on profit margin ratio of the division. So here but are the details. Component GX as such guys. Selling price per unit is 50. Variable cost per unit better. Direct materials, other materials and everything guys. Manufacturing overhead, selling and distribution cost is such better. Total amount contribution per unit. Calculate the present profit of each division guys and the company as a whole, and the company as a whole is such better. Remember the other division requirement guys will determine how much are we transferring to them. Analyze the impact of on the total profits of each division guys and the company as a whole if division Y accepts the offer of the new supplier. In the change scenario, discuss why the top management should intervene and advise a suitable transfer price for component GX for resolving transfer pricing conflict, which promotes goal congruence through efficient performance of the concerned division. ठीक है बेटा, this makes sense. The question is pretty simple guys. Instead of asking us to write minimum transfer price, maximum transfer price, better they're asking us to prepare profitability statements. Instead of asking us guys to prepare minimum transfer price and write what is minimum transfer price and maximum transfer price, the requirement is to simply compute profits as such guys, and based on those profits we'll have to write. See guys, even if you write minimum transfer price, maximum transfer price, the conclusions are not going to change. Even if you go through the route of minimum transfer price beta and maximum transfer price, the conclusions are not going to change. However beta, here the requirement is very specific that we will have to write or we will have to compute profits. Read the question guys, understand the question. I have understood the question guys. It is your job now. You will have to understand the question. Ensure that you do it properly guys. I gave you a lot of time to read the question, but I hope you all understood the question. Remember, guys, we have to prepare profitability statements as such, guys, to arrive at. I will write the given details, guys. Do not worry. I'll write the given details, but pehle dekho, guys. I have a habit of doing this. I will always do it better. Now, guys, if you talk about division X, component GX. पहले डिवीजन Y का लिखता हूँ बेटा, सॉरी. डिवीजन Y बेटा, प्रोडक्ट जैक्सन. Their capacity beta is 1,50,000, but demand is only 1,20,000. But demand as such beta, production beta would be equal to a demand of 1,20,000 units. 1,20,000 units. GX requirement beta per unit of Jextin is 2 units. Therefore, total requirement, guys, total requirement of division Y, guys, of division Y, but only 1,20,000 into 2 beta 2,40,000. It would be 1,20,000 beta into 2, guys, 2,40,000. This would be the total requirement, guys. Total requirement. Okay. Yes, sir. Their variable cost as such beta other than component GX as such, guys, is 22, 13, 35, 40, 42. Their variable cost per unit, guys, excluding Jexton. Variable cost per unit excluding GX as such beta is कितना बोला बेटा मैं 22, 35, 42. 42 as such beta. The selling price per unit as such, guys, that they're incurring has 180, guys. 180 beta. Understood, sir. So this is their variable cost per unit and this is their selling price per unit. Now if you talk about division X, I'm just writing the given details as such, guys. The capacity as such beta, is 5 lakh units. 5 lakh units. External demand as such beta is only 3 lakh units. External demand is only 3 lakh units. But let us not forget, guys, 2,40,000 are transferred internally. As such beta. 2,40,000 are transferred internally. So external sales beta would be restricted to 2,60,000. External sales beta will be restricted to 2,60,000 units. 2,60,000 units. If you look at the variable cost per unit, guys, of internal transfers, remember we will not incur. It will be 12 plus 16 plus 2, guys. No variable S&D. Your variable cost per unit, guys, for external sales. ₹34. 34 rupees. These are all the details that you need, guys. Using these details as such, guys, we're going to arrive at profitability. Please write these given details, guys, all of you. Beta, please write this given details, guys, properly. I hope you're all done with this, beta. Just writing the given details, guys, so that you understand. I hope you're all done, beta. We will now have to write all of the profitability, beta, there. Guys, the objective of writing all of this, beta, is to ensure that you understand, guys, and you do not go wrong. ठीक है? Yes, sir. अभी बेटा अपन लिखेंगे, guys, first bit, guys, present profit. Present profits. Okay. Yes, sir. Present profits. If you talk about this thing, guys, so यहाँ पे बेटा first one is division X. I'll write बेटा internal transfers, external sales, external sales. Division Y, guys, external sales, external sales. As far as the output is concerned, as such, guys, or volume is concerned, total column में total profits लिख लेंगे बेटा. As far as the output is concerned, guys, remember, guys, the format of the profitability statement does not really matter, guys. In the examination, they've given us expenditure wise details, guys, for 2 marks. Just not possible, beta. You will not have so much time. It is better, beta, that you directly write how much is your variable cost per unit. We are not doing FR, beta, here. Okay? 2,40,000, guys. 2,60,000. 1,20,000. Your selling price per unit, guys. Internal transfers, beta, here it is 50, guys. External sales is also 50, right? Yes, beta. Here, beta, external sales are 180, guys. 180. Variable cost per unit, guys, would be, we've already computed, beta, for internal transfers our variable cost is only 30. External sales it is 34. Here, beta, it was supposed to be 42, guys. But apart from 42, you will need 2 units of GX. You will need 2 units of GEX, beta, apart from 42 rupees. So that is 142 in totality, guys. So your contribution per unit is such, beta, here is 20, 16, and then, guys, this is 38. Total contribution, beta. Total contribution 20 into 24, beta, is 48 lakhs. 16 into 2,60,000 is 41,60,000, guys, and then 38, beta, into 1,20,000 is 45,60,000. Our total contribution, beta, here, guys, would be 48 and 89.6 lakhs less the amount of fixed cost. The amount of fixed cost, beta, here is 40 lakh rupees and 20 lakh rupees. So the amount of profit, beta, that they're making at present is, this division is making 59.6 lakhs. 40 lakhs ही है ना? हाँ sir. 20 rupees into 2,40,000, guys, and 16 rupees, guys, into 2,60,000, and यहाँ पे बेटा it is 25,60,000. So overall profits made by the company as such, guys, is 85.2 lakhs. 85.2 lakhs. I hope you're all clear about this, guys. This is the present profitability statement. Kuch nahi hai, but I just took their external sales, I took the selling price per unit, I took variable cost per unit, and I multiplied. Check, guys, if you've all got the same answers. We'll present similarly, but for the second bit. For the second bit. सब लोग check करो, guys. All of you guys do check. Guys, this is 49.6 lakhs better. 49.6 lakhs. अरे यार. And 75.2 lakhs. 75.2 lakhs. Understood, sir? Please do it, guys. Yes, guys. You all done with this, guys? Please check the calculations. Yes, guys, I hope everyone got the answer better. These are the profits. Second bit, guys, important bit, guys. याद रखना बेटा, this question we are deviating, मतलब we are not going as per our normal presentations, guys. Instead, बेटा, we are presenting बेटा by computing profits. Instead, बेटा, we are presenting it by computing profits. हाँ sir, चंगा, आप continue करो sir. We have understood everything. I'm so proud of you guys. In the second bit, guys, Division Y procures from external market. Procures better from external market at 47, right? External market at 47. So division X better. Division X, guys, will now sell. Will now sell only in external market. Will now sell, guys, only in external market. Division X better can sell 3 lakh units. can sell 3 lakh units. Division X beta can sell 3 lakh units. Understood, sir. So if you look at the profitability beta now, division X and division Y and total. External sales, guys. All of them are external sales only. These are 3 lakh units, guys. These are 1,20,000 units. The selling price per unit as such beta for external sales is 50 rupees as such, guys. This is 180. The variable cost per unit beta here it is 34. Here beta it is supposed to be 42 plus 2 times of 47. 2 times of 47 plus another 42, guys. It is 136. So this beta would give me the amount of contribution per unit 16. 180 minus 136, 44. Total contribution as such, guys, would be 16 into this 48 lakhs beta, 1.2 lakhs into 44, 52 lakhs 80,000. The amount of fixed cost that we are incurring beta is 40 lakhs and 20 lakhs. So the amount of profit that division X will report is 8 lakhs, and here beta it is 32.8 lakhs. Overall profit 40.8 lakhs. Overall company beta 40.8 lakhs. Advise, analyze, पूछा क्या बेटा वो? Analyze the impact of total annual profits. Analyze as such, guys. Please understand, guys. I hope एक काम करो बेटा, सब लोग ये copy कर लो, guys. Then we will present the analysis together. All of you copy this profitability statement, guys. And then we would be presenting the analysis part together, guys. We would be presenting the analysis part together. Beta, you copy this first. Finish off this beta, then we'll present the analysis part together. चलो guys, I'm assuming that you're all done with this. I'll wait for 10 more seconds. सबका हो गया बेटा ये? Yes, guys. The total amount of profit here is 40.8 lakhs. Now, guys, you think better, how will you analyze this information? How will you analyze this information as such, guys? What according to you better should be the analysis? What according to you as such beta should be the analysis as such, guys? So no, you can either pause the video beta, present your own analysis, try to explain as to why the profits are decreasing, guys, from 75.2 lakhs to 40.8 lakhs as such, guys. That is a decline of 34.4 lakhs, a decline of 34.4 lakhs as such, guys. So guys, it can be easily explained as such, guys. It can be easily explained as such beta. So no, guys, overall profits of the company, I will explain, guys, you can listen. Overall profits of the company, you can copy after that, guys. Please do not be in a hurry. Of the company as such beta are reducing by, the overall profits of the company beta are reducing by कितना है बेटा ये 75.2 lakhs minus 40.8 lakhs as such, guys. 75.2 lakhs minus 40.8 lakhs beta 34.4 lakhs, 34.4 lakhs as such, guys. If you look at this beta, division X as such beta, earlier the profit was decreasing from 49.6 lakhs to 8 lakhs beta, that is 41.6 lakhs. Division Y beta, increasing from कितना है बेटा वो 25.6 lakhs to 32.8 lakhs, 32.8 lakhs as such beta. All the other questions, guys, we never presented using profitability statement. Here beta we are, here we are. So guys, this can be easily explained as such, guys. This is on account of lower procurement cost. This is on account of lower procurement cost beta. What is a lower procurement cost? Their existing purchase beta, existing purchases from division X, existing purchases beta from division X beta were at 50 rupees per unit, but now, guys, external purchases are at only 47 rupees per unit. External purchases beta are only at 47 per unit. Yes or no? 47 per unit. Understood, sir? It is only at 47 per unit. So guys, their savings as such beta would be 3 rupees per unit into they will procure 2,40,000 units as such beta, and that is 7,20,000. That is 7,20,000. This is what explains beta increase in the profits of division Y beta from 25.6 lakhs to 32.8 lakhs. Here beta, if you see, guys, there's loss of contribution beta from internal transfers. There's loss of contribution beta from internal transfers. This division as such beta is no longer transferring as such, guys. 2,40,000 into 50 minus 30. Internal transfers as such, guys, was giving them as such, guys, a contribution of 20 rupees per unit. They were transferring 2,40,000 units. So yes beta, there's a loss of contribution. Also, guys, incremental contribution from additional external sales, because they are not transferring internally as such, guys. Because they are not transferring internally as such beta, they're now selling 40,000 more units beta, 40,000 more units beta in the external market as such, guys, which is giving them a contribution of 16 rupees, guys. So this is 6,40,000. Increase in external sales beta is 40,000 units. Please do not forget that, guys. Earlier you were selling only 2,60,000, but now you're selling 3 lakhs. So if you see, guys, the net impact as such beta, is a loss of 48 minus 6.4 beta, 41.6 lakhs. This is what we got beta here. Division X profit is increasing by 41.6 lakhs. Division Y ka profit beta is increasing by 7.2 lakhs. Undoubtedly beta, this decision is not from the viewpoint of the company. This is where beta discuss why the top management should intervene. This is not a decision from the viewpoint of the company, guys, which is what we are going to answer in the third bit. That boss, this is not suboptimal. This is suboptimal decision making. Do not forget the fact that our marginal cost or our cost of manufacturing is only 30 rupees. Our cost of manufacturing is only 30 rupees as such, guys, and we're procuring this component beta from the external market at 47 rupees beta. So that's an incremental cost of 17 rupees on those 2,40,000 units. 17 rupees, guys. Understood, sir? ये copy करो बेटा analysis. Copy this analysis as such, guys. All of you better copy this analysis. I hope you're all writing this analysis, beta. Once you write this analysis, guys, we will ये दोनों लिखो beta. Once you write this analysis, beta, we will write the answer to the third bit. Answer to the third bit, guys. I hope you're all done. सबका हो गया guys, नहीं हुआ तो pause करके copy कर लो. Now guys, listen to the third bit, guys. Why the top management should intervene. We all know better that whenever they are given total autonomy as such, guys, whenever they're given total independence to decide whether they want to sell it to the other division or whether they want to procure from the external market, there can be suboptimal decision making better. There can be suboptimal decision making. ध्यान से सुनना guys, वरना मार दूंगा, याद रखना. Listen carefully, guys. First thing, guys, is minimum transfer price. Minimum transfer price is such, guys, is whatever is the additional outlay per unit. Whatever is the additional outlay per unit as such, guys. Additional outlay per unit plus opportunity cost, if any. Plus opportunity cost, if any. Yes or no? Yes, sir. Whatever are the internal transfers as such, guys. If 2,40,000 units are to be transferred internally, remember guys, 2 lakh units are out of spare capacity. 2 lakh units are out of spare capacity. Please listen, guys, are out of spare capacity. Yes or no? Guys, because we have an external demand of 3 lakh units. Because we have an external demand of 3 lakh units. 2 lakh units only is the spare capacity, guys. And that 2 lakh units will be transferred out of spare capacity. Balance 40,000 beta by reducing external sales. Balance 40,000 units by reducing external sales. By reducing external sales. Understood, sir? Let us not forget beta that the variable cost of internal transfers is only 30 rupees and not 34. Variable cost of internal transfers beta is 30, not 34. We are not incurring variable S&D, guys. Variable S&D. Understood, sir? So our minimum transfer price is such, guys. Our minimum transfer price for transfers out of spare capacity. It is, I'm not telling you beta that we will charge minimum transfer price. Sun lo, explanation sun lo. For transfers out of spare capacity as such beta, it should be only variable cost, and that is 30. And for transfers beta, by reducing external sales, it will be both variable cost beta plus contribution. So that beta would be 30 rupees plus 16 rupees. Contribution foregone beta on external sales is only 16 rupees. Please do not forget beta, contribution foregone on external sales as such, guys, is 16 rupees and not 20 rupees. Okay? Yes, sir. Maximum transfer price beta would be lower of net marginal revenue. And supplier price, external supplier price. This would be your maximum transfer price, guys. So sir, how am I supposed to arrive at the amount of maximum transfer price? So no, guys, I will have to write net marginal revenue beta compulsorily. I do not have an option, guys. Net marginal revenue, guys. The selling price beta for division Y is 180. Variable cost beta excluding GEX, we already wrote this beta, is 42. So 138 beta is for 2 units of GEX. Per unit of GEX beta, it would be 138 divided by 2 beta, 69. So here, guys, if I write now maximum transfer price, as such beta, it will be lower of 69, and external supplier price has come down to 47 beta, so that will be 47. That would be 47, guys. Please understand, guys, it would be 47. This can also help us. I hope you're understanding beta. Net marginal revenue in this question is important. Question mark kar lena beta, question number 13, and write in the question that net marginal revenue concept here is important because it is not per unit of input. We need 2 units of input, guys. That is why you'll have to divide it by 2. For every unit of GEX beta, we are going to get an additional revenue of 69 rupees. For every unit of GEX as such beta, we are going to get an additional revenue of 69 rupees. I hope you're understanding beta. Please mark the question as important. Mark that point. That means you'll have to go through the point of net marginal revenue here beta. Input 2 units. Very, very important. See, guys, if division Y is procuring from external market, just for our understanding beta, procuring, abhi tak to beta I just wrote about what is minimum transfer price and what is maximum transfer price, that we have been learning in every question. I just wrote about minimum transfer price beta and maximum transfer price as such beta, that I wrote in every question. So if division Y beta is procuring from external market as such, guys, what will happen beta? Company as a whole beta will lose. How much will we lose beta? On 2 lakh units, guys, that is transfers out of spare capacity, it is 47 minus 30, because maximum transfer price is 47, guys, and minimum transfer price beta is 30 rupees. On 40,000 units beta, it is 47 minus 46. So basically, guys, this is maximum transfer price minus minimum transfer price. Maximum transfer price beta is your external supplier price. Minimum transfer price as such, guys, is the opportunity cost. It is your relevant cost of manufacturing. 2 lakhs into 17, 34.4 lakhs. Isn't this the answer, guys? Isn't this the answer that we wrote in the previous bit? Yes. However you want to present it, guys. This is how we've been presenting in every other question beta. That is why I've presented like this in this question as well. This is how beta we've been presenting in every other question beta. That is why I've presented it like this in this question as well beta. So yes, our loss beta is 34.4 lakhs. However, guys, what should the top management say beta? The top management should intervene as such, guys, and fix a transfer price of, say, guys, 46 to 47 rupees. Even if division X is pricing at 46 beta, even if, see, guys, if you look at the range of transfer price, guys, for transfers out of spare capacity, please understand beta, company as a whole is losing. It will be 30 to 47. By reducing external sales, guys, by reducing external sales, beta it is 46 to 47. By reducing external sales, beta it is 46 to 47, guys. By transfers out of spare capacity, beta it is 30 to 47. 30 to 47. Understood, sir. See, guys, the top management beta, the top division X beta, or say division X beta can fix a price of division X beta can price at 46 rupees. 46 rupees. There will be, or beta, I would say beta, contribution per unit would be the same as external transfers. Contribution per unit will be the same as external sales. So if you want to provide, to maintain profitability of division X as such, guys, to maintain profits of division X, as it is they were making way too much profit beta. Now to maintain profits of division X, transfer price as such beta can be 46 to 47. Transfer price beta can be 46 to 47 if they want to maintain profits of division X. Because even see, if he's transferring at 30 rupees as such beta, obviously he's not making any profit out of internal transfers. If it's, and guys, the other division is willing to pay 47. The other division beta is willing to pay 47. Division Y beta is willing to pay 47. He never said I will not pay 47. तो आराम से ट्रांसफर करो ना बेटा. You can transfer at 46 also, no? 46 or 47. You will make your profit beta. The other division also will make their profit. So this is what beta you should know as to why. Discuss why the top management should intervene. The company as a whole beta is losing. The company as a whole is losing as such beta. This is why the top management should intervene. समझ में आया? हाँ सर. Write down, guys. All of you better write down. This is the answer to the third bit. Write properly in your books better. ऐसे तो guys, every question is simple only better, but then the way we are presenting it, the way we are writing it as such, guys, it is taking a little time. All the questions are simple only, guys. Only the way we are presenting it better, it is taking a little time. ठीक है? ठीक से करना बेटा. All of you write this better, and after that we will move to the next question. Interesting question, guys. Yes, guys, I hope you're all clear about this. Yes, guys. I hope you're all doing it beta. ठीक से करो guys. Copy all of this. Yes, guys, I hope you all copied this better. I hope you're all done with this. I hope you all understood the question. एक second, guys, मैं कहाँ पे हूँ? हाँ. Here, guys, I hope you all understood the question. Question number 14, guys. Question number 14, beta. This is an interesting question, guys. A company has a division of producing three products called XYZ. Division A, beta, producing three products. Each product can be sold in the open market in the following manner. Maximum external sales, guys, of product X are 800 units, product Y are 500 units, product Z, beta, is 300 units. It's a nice question, beta. Question number 14, 15, 16, all are same, guys, similar questions. There's only one question included in ICI study material, but then I've included more questions better on these formats because they all talk about opportunity cost and they will help you in building understanding about key factor as well. Remember, key factor, guys, make or buy decisions. Principles are same, guys. Principles are same. So, guys, we have the maximum external sales beta for product X, product Y, and product Z. All figures are in rupees. Below beta, selling price per unit is 96, 92, and 80 rupees. Variable cost of production in division A beta is 33, 24, and 28. Labor hours required per unit beta in division A, guys, is 6, 8, and 4. 6, 8, and 4, guys. Product Y can be transferred to division B, but the maximum quantity that might be required for transfer beta is only 300 units of Y. Product Y can be transferred to division B, but the maximum quantity required is only 300 units. Division B beta could buy a similar product in the market at a price of 45 rupees per unit. At a price of 45 rupees per unit, guys. What would be the transfer price beta per 300 units per unit for 300 units of Y? If the total hours available beta in the division are 13,000, 8,000, and 12,000. 13,000, 8,000, and 12,000. Also indicate the transfer pricing range beta that can promote goal congruence. That can promote goal congruence as such, guys. Guys, what you will have to do beta is read the question for a minute only, guys, and then I'll tell you how to approach the question. This question is going to be important. There are going to be a lot of explanations in this. Though the question seems pretty small as such, beta, explanations beta we will take a lot of time, and there's nothing to worry, beta. It is required. It is required. Yes, guys, I hope you've read the question, beta. I gave you only a minute to read the question, guys. I have, the intention was only to give you a minute, beta, to read the question there. Here, guys, we have the selling price per unit. We have selling price, we have variable cost, guys, we have the number of labor hours required. You clearly understand beta that this is combined with limiting factor given in terms of labor hours. Forget the fact beta that we have to transfer. Forget the fact beta that we have to transfer, guys, something to division B, guys. Let us forget that fact. What I'm supposed to do beta is, if division A beta is operating like this, what would be the contribution per labor hour? Which product are they going to give preference to, and how are they going to allocate the labor hours? That is what is important. Forget the fact beta first that you have to transfer as such, guys. Question number 14 beta. Question number 14 as such, guys. Forget the fact as such beta that you have to transfer. The first thing that we will do beta is, ये एग्जाम में मत लिखना बेटा, forget about internal transfers. Forget about internal transfers, guys. The very first thing beta that we have to do is decide product mix. First beta I'll have to decide is product mix of division A based on only external sales. Based on only external sales. based on only external sales as such, guys. You will have to decide what is the product mix as such, guys, of division A. Understood, sir? Understood, sir. We will have to decide as to what is the product mix of division A based on only external sales, guys. Allocation of labor hours, beta, based on contribution per labor hour. This part, beta, everyone should be able to do it based on contribution per labor hour. समझ में आ रहा है? First thing that I'm telling you, beta, is forget the fact as such, guys. This is to determine. This is better to determine the opportunity cost. In case I want to transfer internally as such, but I should know what is the exact amount of my opportunity cost. For that, I should know better which product sales am I reducing. Undoubtedly, better I will reduce that product sales better which is contributing the least. I repeat, guys, right now, better the concentration is on to deciding the product mix of division A better based on purely external sales. And then better we will see that in case I want to transfer internally as such, guys, what is the product, which external sales am I reducing, guys, so that I know better what is the exact amount of my opportunity cost. So that I know what is the exact amount of opportunity cost. Are we clear? Yes. So that is what you'll have to know better here. So guys, compute karte better. Computation of contribution per unit. Computation of contribution per unit and contribution per hour and contribution beta per hour. Computation of contribution per unit and contribution per labor hour, guys. Three products as such beta X, Y and Z. X, Y and Z. So here, guys, you see beta that your selling price per unit is 96, 92 and 80. Variable cost per unit is 33, 24 and 28. So the amount of contribution per unit as such beta would become, the amount of contribution per unit would be 63 rupees. 63 rupees, guys, here. 96 minus 33 beta. 92 minus 24, guys, 68. 80 minus 28, 52. The labor hours as such beta required per unit are 6 hours, 8 hours, 4 hours. So your contribution per labor hour is such beta. Contribution per labor hour. Guys, I'll have to check the question as such, guys, here. थोड़ी गड़बड़ दिख रही है बेटा. Figures got mismatched as such बेटा. Figures ऊपर नीचे हो चुके हैं. Give me a minute, guys. We will first finish this बेटा. ये जो 96, 92, 80 के basis पे we'll finish this. Then I'll tell you बेटा what are the changes to be made. Because the external price of product Y बेटा cannot be 45 rupees. यहाँ पे बेटा it is 92 rupees. Just not possible, guys. Maybe, guys, when I was the question was being copied as such better, two questions got mixed up. I'll check better. So this is, sorry better, 63 divided by 6, guys. 63 divided by 6, 10.5 rupees. 68 divided by 8 beta is 8.5 rupees. 52 divided by 4, guys, is 13 rupees. If you look at the ranking as such, guys, first ranking beta is given to product Z, second to product X, third ranking to product Y. Write this, guys. Write this beta. Meanwhile, I'll check the question. Write this, guys. All of you better write this. Yes, beta. The question seems to be correct only. The question seems to be correct, guys. I do not know why, but I do they give figures like this. सब लोग ये खत्म करो guys. Contribution per unit and contribution per labor hour, guys. We will allocate those labor hours beta 13,000, 8,000 and 12,000 hours beta first. 13,000, 8,000 and 12,000 hours beta to these external sales, and then beta take a call. And then take a call. Doesn't make sense, guys. I do not know why do they prefer giving it like this. Yes, beta. I hope you're all noting it down, guys. I hope you're all doing contribution per labor hour. I'll just wait for a minute more. After that, beta, we'll have to allocate labor hours. After that, guys, we will have to allocate labor hours as such, guys. 3 cases, 13,000, 8,000 and 12,000 hours. Yes, guys, I hope you're all done with this. You'll now talk about allocation of labor hours as such, beta, here. Allocation of labor hours in all the 3 cases, guys. Allocation of labor hours in all the 3 cases. Please do not forget, beta, the least ranking is given, guys, to product Y only. The least ranking, beta, is given to product Y. Huh. The least ranking, beta, here is given to product Y as such, guys. Allocation of labor hours as such, guys. 3 instances. 13,000 labor hours. There is 13,000 beta case 1. Case 2 beta there are 8,000 labor hours. Case 3, guys, there are 12,000 labor hours. We all know, guys, that the first preference as such, guys, will be given to product Z, guys, that is resulting in the highest amount of contribution per labor hour. The external demand as such, beta, for product Z, guys, is 300 units, and every unit, beta, takes 4 labor hours. 4 labor hours. So that beta would be 1200. That beta would be 1200 labor hours. What are the number of labor hours available as such, guys, and how much has been allocated to product Z? Okay. So after this, guys, I will have a balance of 11,800. I'll have a balance of 6,800. I will have a balance of 10,800. These are the labor hours that are left, guys. Second ranking as such, guys, has been given to product X, guys. Product X. How many units, guys? Product X, beta. Product X, guys, has 800 units, beta. So 800 units, guys. See if you have a number of labor hours available. Yes, beta. 4,800 hours. So in all the 3 cases as such, guys, you will be allocating 4,800 hours. How much is left, beta? 11,800 minus 4,800. 7,000 hours are left here. Here only 2,000 hours, and here, beta, it should be 6,000 hours. Next, beta, ranking has been given to product Y. External sales of 500. 500 into 8, guys. तो यहाँ पे तो बेटा I will write 500 units into 8 hours, guys. 4,000 hours. Here also I will write beta 500 units into 8 hours as such, beta 4,000 hours. But when your labor capacity is only 8,000 hours, beta, you will not be able to manufacture all the 500 units of Y, beta. It will only be 2,000 hours divided by 8 hours per unit. 2,000 hours divided by 8 hours per unit, guys, and that is 250, guys, units. 250 units. So we still have a spare capacity as such, beta, left. Spare capacity, beta, left in the first case, beta, is 3,000 hours. Here there is no spare capacity. Here there is a spare capacity of 2,000 hours. These are your spare I'll just write, beta, again, product mix, beta, for external sales if there are no internal transfers. X beta, we are meeting the entire demand, guys, in all the three cases. 800 units, 800 units, and 800 units. Let us not worry about internal transfers, guys, first. Product Y beta, it is 500 units here. In the second case, it is only 250 units, and here beta, it is again 500 units. Product Z by Z, it is 300 units, 300 units, and 300 units. This is your product mix, guys. I hope you've all understood this, beta. This is your allocation of labor hours. I hope you were all doing it with me. Based on this, beta, we will now decide whether it is worthwhile to transfer, and if yes, what should be the range of transfer price. If yes, what should be the range of transfer price? Copy, guys. Yes, beta, copy. All of you, beta, copy this. Arrive at the allocation, beta. I hope you're all clear about this. Yes guys, I hope you're all done with this. अभी ये देखो guys. Remember guys, we will have to take each case as such beta and then answer it separately. We have now decided beta as to what would be the opportunity cost, as to what is the amount of spare capacity available and everything. ठीक है? Case 1 guys now. 13,000 labor hours. 13,000 labor hours. We already have a spare capacity of how much guys? Sir, we have a spare capacity of 3,000 hours. 3,000 hours. What are the labor hours required guys? What are the labor hours required? Labor hours required as such beta to transfer how many units as such guys? To transfer 300 units of Y internally. Internally beta, that will be 300 units into 8 hours. Into 8 hours. 2,400 hours. 2,400 hours. So entire transfers beta, entire transfers will be out of spare capacity. Will be out of spare capacity. Yes or no? Yes sir. So if that is the situation as such guys, if that is the situation beta here, what are you going to write? Your minimum transfer price beta would be the variable cost of Y. Minimum transfer price beta would be the variable cost per unit of Y guys, and that is 24 rupees. Maximum transfer price beta is the external supplier price beta for division Y. External supplier price beta for division Y. The external supplier price beta for division Y as such guys is 45 rupees. It is 45 rupees. So this beta would be the range of transfer price. You should transfer as such guys. Range of transfer price as such beta is 24 to 45. Remember beta, we should transfer. We should transfer because it will result in a benefit to the entire organization. The entire organization would save 21 rupees into this. We should transfer guys. समझ में आ रहा है? हाँ सर. So this is the first scenario beta wherein we have a capacity of 13,000 hours, but then guys we have a spare capacity of 3,000 hours. We need only 2,400 hours. So entire transfers beta will be out of spare capacity. Your minimum transfer price is equal to variable cost, and then maximum transfer price is external supplier price for division Y. That's the answer. Understood? Yes sir. Division B beta. We should transfer. This is the answer guys to the first bit. Finish guys. I'll just wait for a minute, but all of you finish it. All of you better finish it. Chalo guys, I think there's a lot of time given. Now if you look at the second scenario, beta, that is 8,000 hours. If you look at the second scenario, beta, that is 8,000 hours. There is no spare capacity. There is no spare capacity. Yes or no, guys? No spare capacity. To transfer 300 units. Sun lo beta. To transfer 300 units internally, guys. To transfer 300 units of Y internally, we have to reduce external sales. We have to reduce external sales. External sales of which product, beta? The least contributing product. The least contributing product, beta. The least contributing product is external. Contributing product, beta, is product Y only. Is product Y. Is product Y only, guys. It is contributing only 8.5 rupees per labor hour. It is contributing 8.5 rupees per labor hour. Zaruri nahi hai beta, in every case it should be the same product that you have to transfer internally. Usually it is the other product. Usually beta, it is the other product. So yes beta, please be careful. Do not jump to conclusions like this. The least contributing product. So basically guys, we have to reduce external sales of Y. We have to reduce external sales of Y. I would prefer writing like this better. We have to reduce external sales of Y. Please write like this better. कैसे लिखोगे इस? Your minimum transfer price beta would be, minimum transfer price beta would be, what is the variable cost per unit of Y plus what is the amount of contribution foregone on Y. Here it is on Y only beta, not necessary that this should be on Y. Just say next question में देखेंगे beta, it will be some other product. It will be some other product as such guys. So your variable cost beta is 24 rupees per unit. Plus beta contribution foregone is 8.5 rupees per hour is what we are losing on the other product guys, and we need 8 hours. We need 8 hours beta to manufacture that. You will obviously come back to the selling price only beta of product. You will obviously come back to the selling price only as such guys. You will obviously come back because it is the same product guys, but not necessary beta you should come back to selling price. I will tell you this in the next question. I will point out to this point beta in the next question again. Your maximum transfer price as such beta would be the external price. Would be the external price as such beta for division B, and that external price as such beta is 45 rupees. So guys, there will be no transfers, no internal transfers beta. There will be no internal transfers guys. It is not economical from the viewpoint of the entire company as well. Why will you want to forego 92 rupees beta? Yes or no? There is a huge amount of opportunity cost as such guys. You will not want to forego guys. So this is the answer. This is the answer as such guys. Please understand guys. Copy करो बेटा ये. All of you guys copy this. 8,000 hours का guys. Please copy this. Your minimum transfer price will now become the external selling price of product Y itself as such guys. Product Y itself. Guys, we did this in a lot of questions. Do copy guys. लिखो guys. The next bit is simple guys. The next bit is simple beta. Here guys. Yes, guys. I hope you're all done with this better. Last bit, guys, here. What if the capacity is 12,000 hours? So, guys, there are two ways of presenting the answer, guys, here. I will present better first, alternative one. Remember, guys, we have a spare capacity of 2000 hours. Yes or no? We have a spare capacity of 2000 hours, better. But the number of hours required, guys, the number of hours required to manufacture 300 units of Y, guys, is 2400 hours. This is what we already wrote beta in case 1. This is just a combination of case 1 and case 2, guys, nothing else. What I'll do beta is using 2000 hours as such beta, number of units that can be manufactured, number of units beta that can be manufactured is 2000 divided by 8 beta, 250 units. 250 units as such, guys. Understood, sir? And here beta minimum transfer price beta should be variable cost per unit of Y, because this is out of spare capacity, guys, 24. Maximum transfer price beta would be your supplier price as such, guys, which is 45 rupees. Supplier price beta, which is 45 rupees. So for these 250 units as such beta, for these 250 units, the range of transfer price beta is 25 rupees to 45 rupees. For this 250 units beta, the range of transfer price beta is 24 rupees as such, guys, to 45 rupees. For balance 50 units as such beta, for balance 50 units, similar to case 2 beta, similar to case 2 as such, guys. Your minimum transfer price as such beta would be 92 rupees. We already did this, guys. Maximum transfer price, मैं दो cases में divide कर रहा हूँ बेटा. Maximum transfer price is 45. No transfers. No transfers. So what's the conclusion, guys, under alternative 1? Transfer only 250 units. Transfer only, you will transfer only out of spare capacity, guys, and nothing else. Transfer only 250 units as such beta, and the range beta there beta would be 24 to 45. 24 to 45. This is one way of thinking beta, but ICI did not do this. Why? I do not know. This is the most logical answer as such, guys, because there's no information given in the question, guys. I hope you all understood this, guys. In the third alternative as such beta, the total number of labor hours available are 12,000. So yes, we have a spare capacity of 2000 hours. We have a spare capacity of 2000 hours. In that spare capacity of 2000 hours, we can manufacture 250 units. That is similar to case 1. We will transfer beta, range is 24 to 45. But for the remaining 50 units beta, it is similar to case 2. You will not transfer. We've already come to that conclusion beta, that we cannot reduce external sales of Y, because that is giving us 92 rupees. That is giving us 92 rupees as such, guys. Now, guys, second alternative. This is assuming we cannot transfer part of the requirement. We cannot transfer part of the requirement. We cannot transfer part of the requirement, guys. Either transfer, this is what ICI gave, guys. I do not agree with this solution. Either transfer all 300 units. Sun lo, but I'll give you time to copy. All 300 units, or transfer 0. Or transfer 0. ठीक है. अब इसके लिए क्या होगा बेटा? To transfer all 300 units beta, 300 units, opportunity cost will arise. Opportunity cost beta will arise on 400 hours. See, guys, this answer that I'm presenting will hold good, guys, if your external supplier as such beta is not willing to supply 50 units. He's telling you, boss, if you want, purchase the entire 300 units at 45, or do not purchase at all. This answer beta will hold good, guys, if your external supplier as such beta is not willing to supply 50 units. जैसे यहाँ पे beta we have given a conclusion that you will transfer only 250 units. मतलब क्या? The other division will have to procure 50 units from an external market. So here, guys, I'm presenting an answer beta on this lines. So opportunity cost beta will arise on 400 hours. On 400 hours. Your opportunity cost as such beta will be equal to 400 hours into 8.5 rupees per hour. Look at the external sales of Y beta. External sales of Y. 8.5 rupees per hour beta wo. That is the least contributing product. So that is 3,400 rupees. If you were to transfer all 300 units beta, there will be opportunity cost, guys, on 400 hours. Your opportunity cost per unit beta, opportunity cost per unit guys, I will have to allocate this beta to 300 units. I will have to allocate this beta to 300 units. Remember, this is the answer guys only if the external supplier will not supply. Now guys, my minimum transfer price would be, minimum transfer price beta would be variable cost per unit plus opportunity cost beta, opportunity cost. We have to forego contribution on 400 hours as such guys. Sir, how did you get 400 hours? 2400 hours required guys. 2000 hours spare capacity. Spare capacity. Always remember guys, in case you have any doubts as such beta, you can always ask. Okay? So my variable cost as such beta is 24 rupees and this beta is 11.333. So this will be 35.333. My maximum transfer price as such beta would be your external price. Would be guys, this is not an appropriate answer guys. This will be an appropriate answer. So but the range as such guys here would be 35.3333 to 45 rupees. This, why will you want to guys lose out on those 2000 hours? Best possible answer beta will arise if you can transfer only 250 units beta at 24 rupees and let the other division beta procure those 50 units from the outside market. That is the best possible solution. Best possible solution. This is the right answer only if division B cannot procure only 50 units from external market. Cannot procure only 50 units beta from external market. They will have to either procure 300 or 0. They will have to either procure all 300 units or 0. Then beta this will be the right answer. They will have to procure all 300 units or 0. And socho guys, you are selling product Y beta in the external market at 92 rupees and your own division is able to buy the same product at 45 rupees. Which market beta will have this information? But anyways beta, I hope you have understood both the alternatives beta. I would prefer guys, this is preferable beta. This is preferable as nothing is specified in question. As nothing is specified in question beta. They never said beta that you cannot buy in parts. They never said beta that you cannot buy a part of the requirement guys. This is ICAI का answer guys. ठीक है? Yes sir. Please copy guys now. With this beta we are done with the entire question. I hope you all understood this guys. I've presented both the alternatives. I hope you want guys, why will I want to take a decision for all the 300 units at once beta when you can take a decision guys only for 250 units separately and 50 units separately. We did these concepts beta even in CVP analysis. Please do it, guys, all of you. हो गया बेटा सबका ये? I hope you're all done with this. I hope you're all done with this बेटा. Pause करके copy कर लो guys, नहीं हुआ है तो. Please pause and copy बेटा, just in case you're not done with this. Please pause and copy, guys. The final conclusion. I have given a lot of time as such, guys, to this. I hope you've all understood the question, guys. I hope there's absolutely no doubt better in this. Yes, sir, we have all understood the question. There's no doubt. Chalo beta, we will now read the next question. Yeah, we are not winding up the class. It's just 2 hours, 16 minutes, 36 minutes. Division Z beta is a profit center which produces 4 products A, B, C, D. Each product is sold in the external market also. Data for the period is as follows. Market price per unit of A, B, C, D is given. Variable cost of production per unit is given. The number of labor hours required per unit is given. Product D can be transferred to division Y, but the maximum quantity that may be required for transfer beta is 2500 units of D. The maximum sales in the external market, guys, are as follows. Division Y can also procure the same product at a slightly cheaper price of 125 per unit instead of receiving transfers of product D from division Z. तो ये हो गया division or product D beta. We are able to sell in the external market at 130 rupees and the other division beta is able to procure from the external market at 125. Do not jump to conclusions that we should not transfer. Wait. What should be the transfer price beta for each unit of 2500 units of D if the total labor hours available at 20,000 hours or they're available at 30,000 hours? 20,000 hours beta or 30,000 hours. ठीक है sir, understood. So what are we going to do beta in this question is just like the previous question beta. Even in this question we are first supposed to compute contribution per unit. We are supposed to compute contribution per labor hour. We are supposed to arrive at the allocation of labor hours, guys, under both the instances. Then we will decide, guys, as to whether it is viable to transfer or not. Let us not jump to any conclusions beta as of now. Understood, sir. All of you better go through the question. After that beta, even if I start solving as such, guys, you pause the video and finish off the question. You pause the video, guys, and finish off the question. I hope you've all read the question, guys. Let us now start solving the question. Question number 15, beta 1 5. This was this is just the fifth question for the day, beta. We did the 10th one, 12th one, we did the 13th and 14th one. We did only 4 questions in this class today. But say beta, even if you go at that pace, guys, we will be able to comfortably finish, guys, all the questions of this chapter. Question number 15, guys. The very first thing, beta, that we do, beta, is to ignore the concept of. You just ignore what? Ignore what, sir? We ignore internal transfers. Ignore internal transfers. You'll have to arrive at resource allocation based on external sales. You have to arrive at resource allocation, beta, based on external sales. Based on external sales. This is better to compute. This is to compute or to know what exactly is your opportunity cost. Which product is contributing the most, which product is not contributing. So first thing that we will do, beta, is computation of contribution per unit. And contribution per labor hour. Contribution per unit, guys, and contribution per labor hour. Okay, sir. 4 products, A, B, C, D. A, B, C, D as such, guys. Our selling price per unit of product A, beta, is 150, 146. You can pause the video and finish off the question, guys. You can always pause the video and finish off the question. Variable cost per unit, beta, is 130, 100, 90 rupees and 85 rupees. Our contribution per unit as such, guys, is 20 rupees, 46, 50 rupees and 45 rupees. The number of labor hours required per unit, or whatever, labor hours only, but required per unit are 3, 4, 2, 3. The contribution per labor hour as such, guys, 20 divided by 3 is 6.667. 46 by 4 is 11.5. 50 by 2 is 25 rupees per labor hour. 45 by 3, beta, is 15 rupees. If you look at the ranking as such, beta, first ranking is to product C, second to D, third to product B, fourth to product A. This is the ranking, guys, of contribution per labor hour. There should not be any problem in doing this, beta. हाँ sir. इसके बाद में बेटा I'll have to allocate labor hours. I'll wait for a minute, guys, and then we'll allocate labor hours. Allocation of labor hours as such, guys, after this. All of you better finish this first. All of you better finish this, and then we will allocate those labor hours, better 20,000 and 30,000 hours. Yes, beta. I hope you're all done with this. I hope you're all done with this, beta. In case you're not done with it, beta, please pause the video and then finish off this part first. Finish this part, beta, first. Okay? Yes, sir. We will finish this. Allocation of labor hours, guys. Based on only external sales. Allocation of labor hours based on external sales. Based on external sales, guys. We have 20,000 labor hours, guys, as the first situation, and 30,000 labor hours as such, but as a second situation. 20,000 labor hours and 30,000 labor hours. Understood, sir? And here, guys, first preference as such, guys. First preference would obviously be given, guys, to product C, guys. First preference is given to product C. The maximum external demand beta is 2,300 units, and that 2,300 units beta, each unit takes 2 hours, so that is 4,600 hours. Here, but I'll be left with 15,400 hours, 25,400 hours. The next preference as such beta is given to product D, guys. Product D, 1,600 units into 3 hours, 4,800, 4,800. So that beta will be leaving us with the option of 10,600 hours beta here and 20,600 hours. The next beta is ranking beta is given to product B, guys, and product B as such, guys, maximum demand is 2,500 units, and that beta is 4 hours. 10,000 hours, 10,000 hours. In the first case beta, we will not be able to manufacture. We will not be able to manufacture all the units as such, guys. तो यहाँ पे बेटा I will write 600 hours divided by 600 hours बेटा divided by 3 hours per unit. Only 200 units beta can be manufactured of product A. Here, guys, I think we will be able to manufacture all of the units, guys, of product A. 2,800 into 3, 8,400. So here beta spare capacity in case of the first case is nil. Spare capacity beta here, in spite of we still have a spare capacity beta here of 2,200 hours. 2,200 hours. Understood, sir? Understood, sir. So if you look at the product mix as such beta now, if you look at the product mix, the only difference that is coming beta here is A 200 units, 600 hours beta, 200 units, and here beta 2,800 units. B, guys, product B, product C, product D, totally manufactured 2,500, 2,300 and 1,600. We are meeting the entire market demand, guys, of these products. So this is the allocation, guys. Now we will know exactly what is the amount of opportunity cost. Should I wait for a minute? Yes, sir, that would be great. Okay, sir, I'm waiting for a minute, guys, so that you all finish off this allocation of labor hours. All of you finish off this allocation of labor hours as such, guys. Quickly do it better. Yes, guys. I hope you're all doing this. Fatafat karo beta. Fatafat karo, guys. Yes, guys. And here better. Final, guys, this part. Hello, guys. I'm assuming that you're all done with this. Now, before we start off as such, guys, before we start off to solve the question as such, guys, इतना याद रखना बेटा, इतना याद रखना as to will it be beneficial as such better to reduce sales of product A better and transfer to product B, transfer as such, guys, to other division. The other division better requires product D, guys. The other division better requires product D. Yes or no, guys? सुन लो बेटा, वन इंपॉर्टेंट नोट गाइस, प्रोडक्ट डी बेटा फॉर इंटरनल ट्रांसफर्स, फॉर इंटरनल ट्रांसफर्स the maximum transfer price better, the maximum transfer price better that they will be willing to offer better as a supplier price 45, supplier price 45, and the variable cost better per unit of product D as such, guys, per unit of product D as such better is 20, 45 नहीं बेटा 125 guys, I'm so sorry, पिछला क्वेश्चन देखा 125, 85 guys. So beta, the difference between variable cost and this beta is 40 rupees per unit. I would say beta there's a saving of 40 rupees, guys, in how many hours? सुन लो guys, I'm coming to an important conclusion. Savings per unit beta is 40 rupees, guys. The labor hours per unit as such beta is 3 hours. So savings per labor hour beta if you internally manufacture, savings per labor hour beta if you internally manufacture would be 13.33. Product D beta actually gives us a contribution of 15 rupees per unit as such, guys, but then if you internally manufacture and transfer beta, you will save 13.33, 13.33. If you compare this beta, compare savings per labor hour. So compare beta savings per labor hour with contribution per labor hour, guys, of all four products, with contribution per labor hour beta of all four products, will it be beneficial or not? See guys, in case you have spare capacity beta, there is nothing like it. In case you have spare capacity beta, there is nothing like it. But in case you do not have spare capacity, guys, in case you do not have spare capacity beta, say product A, guys, and product B, guys, both of them are resulting in lower contribution beta. Product A and B, guys, have contribution. Product A and B beta have contribution per labor hour lower than 13.33. So in case there is no spare capacity, beta, in case there is no spare capacity, we will first reduce external sales of product A. That is the least contributing product. External sales of product A, guys. In spite of that, guys, and then reduce external sales of product B. समझो बेटा मैं क्या बोल रहा हूँ? Then reduce external sales of product B as such, guys. Sir, but will you reduce external sales of product C and D? No, guys. External sales of product C and D beta, and then reduce external sales of product B, guys. If I transfer internally beta, if I transfer maximum transfer price के basis पे भी देख लो बेटा, even if is offering me 45 rupees, I will be saving 13.33 rupees per labor hour. Product A and B beta are giving us a contribution of less than 13.33. Product A and B beta are giving us a contribution of less than 13.33. From the viewpoint of organization, guys, it will be beneficial to transfer to other division either by using spare capacity or by reducing external sales of product A, guys, or by reducing external sales of product B, or by reducing external sales of product B. You will never reduce, guys. You will never reduce. External sales of products C and D beta will not be reduced. External sales of products C and D beta will not be reduced. Most important point, guys. External sales beta of product C and D, guys, will never be reduced. Sir, क्यों नहीं reduce करोगे? You will not reduce it beta because they're giving us a higher contribution of 13.33 से ज़्यादा. Why will you want? Your opportunity cost is more beta. Minimum transfer price beta will be more. Minimum transfer price beta will be more. Are you understanding? समझ में आ रहा है सर थोड़ा बहुत? We are understanding everything, sir. Product D as such beta for internal transfers, guys, will give us a saving of 13.33, guys. That I will compare with the contribution per labor hour, guys, of all the 4 products. If I compare that beta with the first 2 products as such, guys, the first 2 products are giving us a lower contribution per hour. So that is why it will be beneficial beta to reduce it. Alternatively, see guys, if you want to present it like this, alternatively guys, the minimum transfer price beta, minimum transfer price using spare capacity beta, using spare capacity, guys, the minimum transfer price as such beta is variable cost per unit, that is 85. By reducing sales of A, guys, by reducing sales of A, it will be variable cost per unit of D plus what are the labor hours required for D, guys, into contribution per labor hour of A. Matlab, what is the amount of contribution beta that you will be foregoing on every unit of product A, guys? If you reduce the resource allocation to product A beta, you are foregoing 6.667 beta per every labor hour. Yes or no? You will have to recover that beta. You will have to recover that, and you need 3 hours beta for product D. This put together is 105. Next say guys, by reducing, दोनों नहीं करना है बेटा अपन को एग्जाम में. What if I want to reduce sales of B beta next in the order, guys? I will write variable cost of D, guys, plus what is the contribution foregone beta? Contribution foregone. Please understand, 85 rupees I will need beta to manufacture D. Product B beta was giving us a contribution of 11.5 rupees. So for every hour beta that I remove from product B, I am foregoing 11.5 rupees beta, and I need 3 hours to manufacture this. And I need 3 hours beta to manufacture this. 34.5 plus 85, 119.5. 119.5. All of them beta. Maximum transfer price beta in all of the cases. Maximum transfer price beta in all of the cases beta is 125 only. That is not going to change. That is not going to change beta. Maximum transfer price beta in all the cases is 125 rupees only, guys. That is not going to change. Sir, can I reduce sales of D by reducing sales of D beta? Mark how, okay, guys. If you reduce sales of D beta, it will be 85 rupees. D is giving us 15 rupees per hour beta into 3 hours as such, guys. It is 130 rupees. 125. Not beneficial, guys. Can you reduce sales of C, sir? वहाँ तक बात नहीं आएगी बेटा. This is just for your understanding. You will not come to that stage. C is giving us a contribution beta of 25 rupees per labor hour, guys. So 25 into 3 beta is 75 rupees. 75 plus 85 is 160. Same conclusion that I gave here beta. Either you do this, guys, that yes boss, product D will result in a saving of 13.33 if it is transferred internally. This is if you compare this with the contribution per labor hour of all the 4 products, guys, product A and B have a lower contribution, so it is beneficial as such beta for us to reduce sales of product A and B and transfer internally. Please understand, guys. Alternatively, this beta. This is what you've been doing in every question. Minimum transfer price beta is either variable cost per unit or variable cost per unit beta plus opportunity cost. Opportunity cost is different, guys. For product A, the opportunity cost is different. For product B, the opportunity cost is different. For product C, it is different. For product D, it is different. The opportunity cost are different, guys, for all the products. You do not have to do, guys. So, guys, conclusion kya hai beta? From the above also, guys. Transfers can be made only out of spare capacity. Transfers can be made only out of spare capacity. Only out of spare capacity. Or by reducing external sales of A and B. Or by reducing external sales of A and B. Do not touch external sales of C and D, guys. Do not touch external sales of C and D. I'm not done with the question. I still have to compute average transfer price in case of 20,000 hours. But I will discuss that tomorrow as such, guys, not now. You understand this beta. Pause karke copy karo, understand this. In the next class, I'm going to revise all of this again. I have explained both the methods beta so that you guys understand this data. In case you still have a doubt as such beta, please reach out. In the next class, I will be starting from the scratch again. I will be starting beta with all of these explanations again. I'll tell you once I take 20,000 hours beta and 30,000 hours, I'll tell you. Okay? Yes, guys. I hope you're all clear about this, guys. Please make a note. Pause करके copy कर लो, guys. Pause करके copy कर लो बेटा. I'll end the session and then in the next class बेटा I will revise. Please pause and copy, guys. I hope you have copied this better. 1, 2, 3. Pause and copy. Pause and copy, guys. Pause and copy. Pause and copy. Yes, guys. Pause and copy. I hope you're all done. Pause and copy, guys. Pause and copy. Pause and copy, guys. Here, better pause and copy again. We're not done with the conclusion yet, guys. We'll be doing it in the next class. We will be doing it in the next class as such, guys. Chalo guys, I hope you're all done with this, guys. I hope you're all done with this. Do not forget better to go through all of this once again as such, guys. You do not have to do all the alternatives in the examination as such, guys. Even without presenting all of this information, but I could have directly moved to the requirement as such, guys. I'll try explaining that again, but in the next class with the help of requirement. Chalo guys, I'll see you guys in the next class. Keep studying, beta. Bye bye, guys.